Good afternoon. We are doing it live, doing more at 4 weekday afternoons, right after Guy Benson at 3 and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And yes, the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. Kicking off the holiday shortened week with a big rally today, stocks surging on improved prospects for a U.S.-EU trade deal. President Trump delaying the implementation of 50% tariffs on imports from the European Union. That announcement coming over the holiday weekend. The Dow coming in for a closing gain of 741 points, selling at 42,344. The S&P 500 popped 119 points, and the Nasdaq up 462 points. The volatility index, the VIX index, the Wall Street Fear Index, down 3%. Price of gold hovering above $3,300 an ounce. Silver right now at $33.39 an ounce. We've seen the cryptos that move mostly higher as well. Following the Memorial Day holiday closure, stocks roared back today. Another boost coming from a slide in Treasury yields. We'll be taking a closer look at that. That's the yield in the 10-year note especially, which impacts fixed-rate mortgage rates, which have been on the rise lately. Investors now turning their attention to economic reports and more earnings news. NVIDIA shares popped after a report of a lower cost chip from China, for China that is, with the AI leader. NVIDIA set to take the spotlight tomorrow, Wednesday, with the quarter's most anticipated earnings results. The Dow did rally this afternoon with shares of Nike and NVIDIA delivering strong returns for the blue chip average. NVIDIA, as you may recall, is now part of the Dow Jones Industrial Average. Also, banks might be kicking off the earnings season and help setting the tone, but the tech companies have lately had the final word on whether the stock market had a good quarter or not. We'll discuss that coming up here with our special guest. Home prices, meanwhile, in the 20 largest metropolitan areas, including the Los Angeles area, under pressure for the first time in more than 2 years, according to the latest S&P CoreLogic Case-Shiller 20-City Home Price Index, falling a fraction in March from the previous month, marking the index's first monthly drop since January of 2023. Coming up this hour, I'll be joined on the local business scene by a giant here, business and civic leader Lou Horne, president of advisory services at CBRE, the largest commercial real estate firm in the world, longtime president of CBRE here in the Los Angeles area, Orange County, and the Inland Empire, incoming chairman of the Urban Land Institute and past chair of the LAEDC. Lou Horne will be joining me live later this hour for a comprehensive update on the firestorm recovery here in the Los Angeles area, his support for Steadfast LA, as well as the whole works on the commercial real estate scene. What's it going to take to bring Hollywood back to Hollywood? The Hollywood Reset, restoring stability in the California entertainment industry, the subject of a brand new report. Today we'll be joined by economist Kevin KLOWDEN at the Milken Institute, who put that report together. He'll be joining us live later this hour as well. But first, on the big rally today, on your money, the markets, the economy, crypto too. Joining us live now, top-ranked money manager Ken WINANS, President and Chief Investment Officer at WINANS Investments, which you can find at winansinvestments.com. Ken WINANS, also a market historian, author of numerous books. His latest is Investment Atlas 3, Creating Wealth Using Historical Trends. Also Forbes magazine contributor. He has his crypto credentials too. Most importantly, he's host of Winning with WINANS, heard every Monday night at 6 p.m. on your favorite station, 790 KBC. Ken WINANS, thank you very much for coming to the line here this afternoon.
Frank, my pleasure, and I certainly hope you and your family had a wonderful holiday. And, it's great to come off of that. And let me start with that, because I think that is, of everything you mentioned, to me, the biggest thing that came out today was seeing the confidence index moving up, radically moving up throughout this month. And to be honest with you, Frank, that's what I sensed living in Las Vegas. What I saw throughout the entire holiday weekend was a sense of enthusiasm. People were spending money. People were going out. They were gambling. They were going to shows. I mean, they were very much, it was certainly no sense of what I would call a recessionary attitude here. And I think that, plus the fact there were some other earnings reports that came out today, mainly, shockingly, the restaurants. When you look at Texas Roadhouse, Darden, are two of the restaurants that I watch very closely, they both had huge, huge days. So there's still this mix of data. There's old data and there's new data. And by the way, the Case-Shiller index, although, and certainly Dr. Shiller is somebody who I greatly admire, but I think there's one caveat about that index. That index is 2 months old. The data on that is on real estate back in March. If you want a better gauge of what's really going on with real estate nationwide, I would take a look at new homes prices, which came out on Friday. And Frank, they showed a significant rebound versus where they were in April. So I would suggest that, again, as you said, the housing market in Southern California is certainly, with what happened with the fires, it's very dislocated right now, and there's a lot of moving pieces to it. But I just think there's a sense that people are getting used to the volatility, and certainly the market has made back everything it lost earlier in the year. And you know what? I hate to say it, but we might be having a summer rally the way things are going.
On there live with top-ranked money manager Ken Winans, and let's get to some of the exciting stuff here too. Right off the bat, crypto certainly has seen a dramatic rally lately, kissing record highs over the last week since we last talked, Ken, live on the air here. And I'm looking at Bitcoin now, hovering at around 109,000. Ethereum has really roared back to 2,661 here. I'm looking at it right now, and Doge even now at 23 cents. Give us your reaction to this latest crypto rally we're seeing.
And I'm also going to throw Solana in that mix too, because those are now the big three that trade on the Chicago Mercantile Exchange. You know, it's really interesting when you think about again, you know, it's been a very volatile year for news. And when the hacking news came out on Coinbase, I know that really sent shudders to a lot of people. And I distinctly remember that you and I were given, you know, on our show, Winning with Winans, we were giving a lesson to people about the need for things like cold storage. But I mean, the macro trends for crypto, especially with this presidential administration, with the deregulation that will come right after we're done with the tax packages, we're going to move forward with deregulation packages. And I think that crypto is just getting ahead of the curve on this, and it is going to be part of the banking system. I envision a day when people at an investment firm can get it easily, not necessarily an ETF. People will have crypto savings accounts at banks. I think it's all coming. We're just early we're early to the party, and a lot of regulatory groups getting in there. But Frank, I think at the end of the day, you know, this is a different rally. That you can actually say the market changed spots. The rally that we had in 2023, 2024, Magnificent Seven, tech-driven. You know, I mean, everybody was bragging about how much money they were making. This rally, although there's clearly groups that are still not participating. And as I mentioned on the last broadcast, my one piece of advice for anybody, the old adage, sell in May and go away, I would sell your losers now. If they're not participating in this rally, I think they're better off really as tax losses for you than hanging on to them. But it's really quite astounding to see financial stocks really taking their place in the leadership group. Utilities, power, I've been a lot of the news coming out over the last, really all over through the weekend, a lot of the weekend press, the massive power needs we're going to need with AI and certainly with, you know, crypto mining are unbelievably huge. And that the utilities are basically been given a green light. Do what you have to build new plants. So it's a different type of rally, Frank. It really is.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money on 790 KABC. And tomorrow, NVIDIA earnings will be coming out. That'll be a big focus, the so-called Magnificent One, part of the Mag 7 names. NVIDIA stock higher ahead of the announcements tomorrow, up more than $4 at the close today, back to 135 and change. That one has seen an impressive rebound. Ken Winans, what are your thoughts here on NVIDIA heading into its earnings news tomorrow?
You know, it really has. You talk about its rebound. I mean, NVIDIA is another one that's back to even for the year, and so a lot of the other AI plays. You know, it's hard to say what's going to come out of just any one particular earnings report. And, you know, the other thing, too, an awful lot of money managers right now, they truly feel like they're flying blind because they're so data dependent on guidance from companies. And quite frankly, Frank, a lot of the companies are just not giving the guidance that they used to because this is such a screwy year. Whether or not NVIDIA hits their number tomorrow or misses their number, I think it's like we've seen through this entire earnings season. One quarter doesn't make the show. But as you heard when you went to the Millikan Institute, I mean, AI is here to stay. This is something that's going to happen. We clearly need to compete better. We need to support the U.S. manufacturers in the area. NVIDIA is currently in the lead, but let's also not fall behind. As we all know, take a good look at what happened to Intel. At one point in time, Intel was top of the heap. No one did it better in chips. Look at where they are now. So it is a very competitive game. But, the other big news that came out was the whole thing about the finally having some resolution about the U.S. still and upon, trade talk, or certainly the merger talks. And the fact that it is going to stay in the United States. I think that, again, we're going to come back around to people warming up to having industrial stocks in their portfolio, because that is the focus of the government. That's going to be the focus of certainly the tax policy. That's going to be the focus of new loans coming from banks. Certainly the bond market is going to be much more warm to give money to these industrial stocks. So again, it's just a massive shift in this market. And we have to remember the S&P 500 is 500 companies, and they're not 500 tech stocks. There's a lot of stuff in there. And I might be interested to see the other, boring, dull 250 S&P stocks that are just never making the headlines suddenly are.
X, of course, the famous ticker symbol for U.S. Steel. That stock near its 52-week high, just above $53 a share right now, just below 54. It's 52-week high, up $1.03 today to 53.04. Tesla getting a big pop today. Ken Winans, more than $23 at 362 and change. Talk about rebounds. What about Tesla here?
I'm really surprised that Tesla's doing as well as it is, and only from the standpoint of the Senate basically nixing the California EV mandate. But I think what it's also telling us is that we're now going into the orbit of Tesla is one of the premier U.S. automotive companies. That is the focus. If you look at everything that's going on with the EU negotiations, it's about cars. I mean, President Trump's been bringing up, why is it that I see German cars in the United States, but I don't see American cars there? Well, again, I think Tesla is going to be very much front and center of those talks going forward. But, the other thing I would just say is this. Tesla, and I'm hearing more talk about the need for new designs, the need to upgrade things. I mean, the charging station issues. I know people in Southern California have probably gotten very used to having the convenience of charging systems. Just go to 2 states over and tell me if you have the same feelings. It's just not the same. So the simple fact of the matter is that we're having more discussions now about the people who want EVs are going to be able to get them and hopefully have it be much more convenient for them. But I think it's just good old-fashioned. Elon Musk is back in the driver's seat, and they're going to be contending with some of their issues.
Very interesting, and mercifully, we've seen gas prices come down significantly nationwide, not so much here in Southern California, but as you being a historian on all things the economy and markets, have seen this pattern play out before. When gas prices come down, consumer confidence goes up. Although recently, due to the tariff drama, it seems like consumer confidence took a hit based on that. But looks like, as you mentioned here at the beginning, consumer confidence did rise in the month of May after 5 straight months of deterioration after the pause announced in the higher tariff rates between the U.S. and China. According to that latest survey, boosted optimism. Coming off the 3-day holiday weekend, a lot of people across the country were enjoying the lowest gas price.
Hey there, I'm Paula Pant, host of the Afford Anything podcast. I help people make the smartest money decisions possible.
You should not do the 401k loan.
Reason number 4,872. Are we heading for a recession?
You'd be shocked.
Dumping it into the house?
Invest in flipping houses.
Mathematically the better option.
Paula Pant's really keeping us in business.
Because face it, money's too important to wing it. Review your budget.
Take the reins.
Sharpen your skills.
Do the things.
Start a side hustle
that will affect your life.
Right. Afford Anything. Follow and listen on your favorite platform.
This is seen in about 4 years or so. Ken, what do you see ahead on the energy front here with that being such an important component on inflation and consumer confidence and gas prices here?
Well, it is interesting to note that a lot of the oil producers around the planet are producing more oil. There are obviously prices have come down. And Frank, it's interesting to note it's not just crude oil. I mean, today, a lot of the commodity ETFs that I track, they were all negative, meaning the prices had come down. So the narrative we keep hearing about this inflation that's going to be coming up because of the tariffs, it's not showing up in commodity prices. And as a historian, when people like to talk about what happened in the 1970s, well, that was driven by commodity prices going up, whether it was the crude oil because of the Arab oil embargo, which then spilled over into soybeans, spilled over into corn, Gold took off. All these things took off. The only commodity right now that will, I shouldn't say the only one. Copper's doing well, silver's doing well. But if you want to talk about the only thing that's really having a year that is standing out far and above, as we all know, it's gold. And I think that tells us a lot about that. A lot of the narrative we're hearing from the other side about the inflation induced by the tariffs is simply not showing up yet. So you asked about summertime. I actually do think that people will go on vacations this summer. They're going to enjoy themselves. And as that begins to happen, I think you'll see gas prices go up just because of demand. The other thing is, we all know that unfortunately California is not building new refineries. They're actually closing them down. So I think California's situation is a little different than it is in certainly the other Western states.
On the air live with top-ranked money manager Ken Winans, President and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. And at this point, Ken, any specific places where you are putting money now and or taking it off the table?
Well, I'll tell you what. I was really blown away by that rally today in the restaurant chains, and I went and looked at my own stock index, the Winans Legacy Index, and I was looking at Cracker Barrel, Cheesecake Factory, all these restaurant stocks really had a pop today. And I've been long telling everybody in the audience that you really do need to think about just diversifying your portfolios into some of these other growing areas. I'm going to throw a couple of names out in the restaurant world. First and foremost, I take a good look at Texas Roadhouse. It's an interesting chain restaurant, and they've been battling high beef prices, but the attendance is huge. Stock was up 5% today. It's up 11% on the year. That's a tear. The other one I take a good look at would be Darden Restaurants, which is better known as Brinkers for a lot of people who probably go out. But again, these are the chains that survived COVID. These are the chains that figured out logistically what you have to do to make a restaurant work. And little things like tariffs are not going to affect these guys. I think people are going out again and they're enjoying themselves. And again, I would just take a good hard look at those.
Terrific, Ken. Well, thank you very much. As always, wish we had more time and look forward to speaking with you on Winning with Winans on Monday evening, coming up Monday night at 6 p.m. on your favorite station, 790 KBC. Ken Winans, top-ranked money manager, president, and chief investment officer, Winans Investments at winansinvestments.com. Author of numerous books, his latest, Investment Atlas 3, Creating Wealth Using Historical Trends. Look for his articles in Forbes magazine. He's also a Forbes magazine contributor. Also, crypto credentials, real estate, the whole works. And look forward to continuing the conversation on Monday. Ken, thank you very much for taking the call here this afternoon.
My pleasure, Frank. Take care.
Thank you very much. And out to the freeways we go now, 790. Decent rally to kick off the holiday shortened week on Wall Street, with the Dow closing up 741 points, settling at 42,344. The S&P 500 popped 119 at 5,922. The NASDAQ gained nearly 500 points, closing at 19,199. The European Union today agreeing to speed up tariff talks with the U.S. That eased concerns about a transatlantic trade war. This after President Trump's announcement over the weekend that the U.S. would delay imposing a stepped-up 50% tariff on all European Union products from June 1st until July 9th to allow time for tariff negotiations. Treasuries also led a drop in global bond yields on relief that Japan is set to calm recent bond market volatility that drove long-term government debt rates to the highest levels in decades. The 30-year Treasury yield retreated to around 4.94%. Taking a look at the volatility index, it eased today, down 3%. Gold higher, right now $3,304.20 an ounce. Silver at $33.39 an ounce. Bitcoin's been on a tear, kissing record highs recently, pulling back about 800 now at 109,132, $109,132 here at last check. Ethereum hovering at around 2,662. Solana at 177, and Doge at the moment at 23 cents. NVIDIA will be reporting earnings tomorrow. The stock closed higher today by more than $4 at $135 and change. Tesla getting a pop today, up nearly $25 to $362 and change. The auto stocks in focus, Tesla being one of them, of course, also a big tech name. Ford pulling back 5 cents today at 10.31, and GM at 40 cents at 49.09 among the tariff-sensitive names. And U.S. Steel getting a pop today. X is the ticker symbol, and that one up $1.03 at 53.04 a share. Taking a look at some of the other things we track very, very closely, including currencies here. We're watching what's happening with the dollar, which has come under pressure, of course, this year. Taking a look at where we stand right now against the euro, we're at 113, 144 versus the Japanese yen, 135 versus the British pound sterling. The yield on the 10-year note today stands at 4.45%. Mottek On Money continues here in 790 KBC. The massive rebuilding effort continues here in Southern California following the horrific firestorms in January, which impacted Pacific Palisades, Malibu, and Altadena especially. The estimated damage, about $250 million, impacting residential as well as commercial real estate throughout the area. Joining us live now, a giant on the local business scene, business and civic leader Lou Horne, the president of advisory services at CBRE, the largest commercial real estate firm in the world, longtime president of CBRE here in the Los Angeles area, Orange County, and the Inland Empire, part of the Steadfast LA initiative, incoming chair of the Urban Land Institute, and past chair of the Los Angeles County Economic Development Corporation. Lou Horne, thank you very much for coming to the line here this afternoon.
Thank you, Frank. I appreciate the opportunity to speak with you.
Wonderful to have you back with us here. And first of all, give us your view on the ongoing recovery efforts. I know you've been moderating some very, very important discussions on the recovery recently. So give us your view of what's happening.
Well, I think what I'm seeing on the building efforts, nothing short of extraordinary. Seen an incredible outcry for actually funds from the private sector that really help our elected officials make good decisions here. I mean, groups like ULI, which I'm responsible for, and also Steadfast, that's being run by Rick Caruso, among others, have really stepped up and used a lot of the private expertise to really help the city and the county both in their initiatives to try to accelerate the building process. So things like accelerating the permitting idea with AI and self-certification ideas, or really playing a role and even stepping in and helping with some of the environmental testing ideas to try to accelerate that process. All of that has really been a cooperative effort with the city and the county, meeting with the mayor and the supervisor and the city council. So it's been I think a great testimonial around just partnership on private and public work. So that part's going well. I think the Army Corps of Engineers is ahead of schedule, and that's going well. I think there's still a lot of work to be done, though. There's a real effort to try to, and I think there's been an agreement to underground a lot of the utilities, most of the utilities in the Palisades and also in Altadena. And so right now there's this whole effort to figure out how long it's going to take us, how much longer it's going to take us to get the actual infrastructure done so we can commence the rebuilding of the commercial and residential sites.
On the Air Live with Lou Horne, giant on the commercial real estate scene, a civic leader here as well, a longtime business leader here in Southern California. What is your message to Mayor Bass and others in the city right now to accelerate this process? I know people are very frustrated by the slow issuance of permits and so forth. What is it going to take to turn things around?
Well, I think it's really it's just adapting new ideas, which I think are coming forward with a lot of these public or private groups, and we're seeing a real effort there to change the course of a slow entitlement process. I mean, I think things like self-certification and also this combination of AI, that work can reduce the permitting process from a year and a half down to 30 days. And then the city and the county have both agreed to pilot programs where they're going to be implementing this. Shout out for Steadfast, and the AI process has really been pretty extraordinary. But the combination there, I think, is going to be impactful. So everybody's rowing in the same direction. It's just obviously there's a real need for speed. We're estimating, Frank, that for every year of delay on any kind of ability to move back in, there could be up to a 20% fallout relative to people just not wanting to move back in because of the cost or the uncertainty. So there is some urgency, a big urgency with the city and the county to try to do what they can to rebuild the infrastructure on a timely basis so that we can be building, people back in the next 3 to 5 years. So a lot of effort put forth already, and I think a lot more to come. We're also working with a lot of developers right now to coordinate their activities so it can help with the logistics plans of the rebuild on these communities, and also even help with the purchasing power to try to reduce the price per square foot on the replacement for housing. there's a big gap between what the insurance proceeds are typically going to pay for, also and the cost of replacement based on the supply chain issues of building that many structures at any given time. So there's a focus right now to try to build in mass in a coordinated effort that would capitalize on the ability to build to scale and also purchase to scale.
On your live with Lou Horne, the Steadfast LA effort led by Rick Caruso. Tell us about that effort, your part of that effort, and how is that initiative going?
Well, Rick has put together a group of executives in the city of Los Angeles and has actually staffed a group that's helping the city and also the county in any way they can. They've broken their group up into a couple of parts. One is
No Contest Wrestling. O'Shea Jackson Jr. and T.J. Jefferson with the biggest names in the game.
Ricky Sykes is in the house, everybody. NXT North American Champion, baby.
How you feeling right now, man?
I feel great.
Jay Uso, what's going on, man?
A lot of heavy days, but it's okay, man. It's part of the game.
They know who they are, bro.
And you know who I am. TJ, can you tell them where to find us?
I mean, why else are we here? You can always find us No Contest Wrestling. Check us out.
The No Contest Wrestling Podcast, part of the Rich Eisen Podcast Network. Follow and listen on your favorite platform.
the philanthropic organized effort where they're rebuilding a park. They're raising money for the fire department. They've really played a role in working with companies like Disney and Amazon and others to focus on the reimagining of the village in the Palisades and also the commercial districts up in Altadena. They've worked very closely with the ULI group as well to help on the self-certification and the AI process to accelerate that permitting piece. They're working closely with groups, law firms, and also the financial industry to help on coming up with standards around the environmental testing so that there can be testing available so that it'll satisfy the banks and satisfy the insurance companies, both in the short term for getting loans and building projects, and also in the long term to make sure that there are insurable risks that will be able to satisfy the insurance industry, in the future.
What is the status of that ULA tax, something we talked about last time you were on the air with us, and which has been what I think you said pretty much a disaster for commercial real estate here in Los Angeles. Any chance that that's going to be taken off the table anytime soon?
Well, it's too early to tell, but right now I can't make a comment on that other than you know how I feel about that, Frank. I think it was a misguided initiative that was passed through. I think it has not worked out the way that the city wanted it to. I think it was something that was put on the ballot a couple of years ago, and it serves as the law of unintended consequences. I think rather than helping in the homeless areas, it's really, I think, to some degree restricted a lot of the interest around development growth in the city. But I think there's a lot of groups that are taking a really, really hard look at that right now, and I think there may be something that happens on that. We don't know. A lot of effort.
It's unthinkable.
Put forth looking at that.
Certainly, on your live with Lou Horne, it's certainly the unthinkable has happened with all these homes destroyed and businesses destroyed. It appears the homeless situation is only getting worse here at the moment,
yeah.
And you're to be applauded for your philanthropy and leadership with the Urban Land Institute on the homeless front and all the other organizations you're associated with. What do you see happening on the homeless front, and what do we need to do to turn the situation around here?
Well, we still have the largest one of the largest, I think maybe second in the country, homeless populations, unsheltered populations in the county and also in the city. But I do think that a lot of the initiatives that are being developed right now in partnership with private and public leaders in the community are going to have a long-term impact on our ability to entitle and to process permitting. I mean, right now, a part of it, not the entire issue, but a big part of the housing, of the homeless issue is just housing. It's just extremely expensive to live in our community, and we just need to develop more housing. We need higher densities. We need to be able to provide price points where people can afford to raise a family. And right now, you can't do that unless you build more housing. And so right now, I think a lot of what we're talking about in terms of helping with the fire related issues in Altadena and also the city of Los Angeles will play a big role in the long term. I think a lot of the ideas around implementing self-certification, AI work, and finding efficiencies to be able to help these communities is going to be long lasting, far beyond just the impact of the fire and the recovery effort there.
On the air live with Lou Horne, and maybe before we let you off the hook, if you can give us a quick update on what you see happening overall on the commercial real estate scene here in the Los Angeles area. Looks like Century City continues to boom. How's downtown doing following the pandemic and that slow return to the office we kept hearing about? Looks like those places are starting to fill up too. Give us your assessment of what's happening here.
Well, we're seeing that part hasn't changed, Frank. I mean, there's a flight to quality. I think occupiers in the office space are really moving towards Century City, away from other areas. If you're in a B and a C class office building space, it's pretty tough go right now. We are seeing buildings trade at either 50% and sometimes in some cases 30% of replacement value. So we're seeing private equity come into the marketplace and acquiring buildings, which is going to lower the price point down on those areas that are outside of the Century City area. Downtown is still slow. The vacancies are very high. We are starting to see a little bit more activity, but we're still dealing with a lack of demand based on the return to work policies post-COVID. I think you're going to see lower price points, though, in the future in some of these spaces, and I do think that at some point this will turn around, but right now it's pretty slow. Multifamily is the glamour story. It still continues to be very, very strong, with only about a 5% vacancy rate in the basin. Is still one of the most desirable asset class for investors. Our industrial marketplace continues to be strong. The majority of the tenant activity is with what's called a 3PL, which is a third-party logistics company. And these are typically shorter-term leases. A lot of interest coming from Asian, particularly Chinese companies that are in that 3PL business. We're also seeing a pickup in activity in the retail market. People post-COVID really want to be part of the community. They're looking for experiential opportunities, and we're seeing a lot of activity there. The interest rates and the uncertainty right now at the national market are impacting the market in a material way. And I think when we get past this tariff issue and start to see some of these interest rates fall, I think you're going to see a real pickup in the investment community.
Lou Horne, thank you very much for your time this afternoon. I wish we had more time, but thank you very much for that comprehensive update on what's happening here. That is Lou Horne, President of Advisory Services at CBRE, longtime president of CBRE here in the Los Angeles area, an important part of the Steadfast LA initiative led by Rick Caruso, also with the Urban Land Institute and past chair of the LA EDC. Lou Horne, thank you very much for joining us live here this afternoon.
Thank you, Frank. I appreciate all you do for our community, and I appreciate being a part of your show. Thank you.
Thank you very, very much. And out to the freeways we go now, 790 KABC. Frank Mottek here for United Gold Group. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Well, now with the U.S. debt at more than $36 trillion and climbing, the possible recession on the horizon, and the development of the digital dollar central bank digital currency, it's more critical now than ever before to safeguard your assets like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement in the markets and cash savings in the bank. Feel confident, prepared, and in control with physical gold and silver. Give my friends at United Gold Group a call now. The number is 800-753-8534. Mention Mottek and you could get $1,000 worth of silver with a qualifying purchase. Call now, 800-753-8534, or visit UnitedGoldGroup.com. Mottek On Money continues here, 790 KABC. Hooray for Hollywood. What's it going to take to bring Hollywood back to its glory? Well, Hollywood Reset is underway. What is it going to take to restore stability in the California entertainment industry? That's the subject of a brand new report just released today. Economist Kevin Clouden at the Milken Institute put that report together and is joining us live here this afternoon. Kevin Clouden, thank you very much for taking the call here.
My pleasure, Frank.
Take it from the top and tell us what we need to know about your report.
Well, the report basically it comes out because of the fact that a lot has really changed in Hollywood. I mean, everybody knows it, everybody feels it, but if you look on the street, if you talk to people who work at Hollywood, it's not just the strike, it's not just the rise of streaming, it's the competition from incentives, massive incentives to try and lure industry production outside of California. It's a whole bunch of changes that have happened in terms of the economics of Hollywood. All of these factors are combining, but the end result is that productions just aren't being made in California at the same degree as they were even back in 2022 coming out of the pandemic. And really, even prior to the pandemic, back if you look at 2018, 2019, when the actual total productions were really peaking for the industry, let alone, California's share, if you want to go back and look at it for movies, for TV, all of that, you really have to go back a decade earlier than that. And so it's been eroding for some time, but it just hit a critical mass really over the last year or two.
What impact is AI having on all this?
Well, what AI is doing is that it's adding to the competition. It's one of many tools that are going on that's allowing people to make content more easily, to throw it up on TikTok or YouTube or elsewhere. It's also meaning that, potentially that various kinds of productions might not need as many people on them. But ultimately, the real threat right now is an AI, because AI is years away from really hitting that critical mass of, certainly of replacing the really creative individuals in Hollywood. Where the threat is right now is that the economics have changed, and if people want to make productions, they're looking at it and saying it's just too expensive in California. We can do it more cheaply, whether they do it in a state with more aggressive incentives and lower costs, somewhere like Georgia or even Texas or Tennessee or North Carolina, or just going overseas, whether it's to Australia, whether it's to Britain, whether it's to Spain or Hungary or a whole bunch of other places that are all scrambling to get a piece of the entertainment industry.
On the air live with economist Kevin KLOWDEN, and certainly I know you work closely with the L.A. Area Chamber of Commerce, and your report certainly does carry a lot of weight. What are your recommendations to turn this situation around? What is your message to Sacramento and to the City Hall here?
Well, Sacramento, they're already, the governor has already put a proposal in which mirrors a tremendous amount of what we've been recommending, which is that they need to significantly increase the incentives and increase the percentages just simply to combat costs. People can't just make films, especially independent movies and lower cost productions and shorter form TV shows in California anymore and think that they're just going to save enough money by not having to travel. Unfortunately, you need to significantly increase the amount of incentives. We've actually found that just the sheer scale and scope, even raising it to $750 million a year, which feels like a lot, but that's not even close to the amount that, say, Georgia has made available, Britain's made available, and others. And the other thing we found is that they need to put more resources into streamlining the process. Right now, the incentives are set up based on, old network television schedules. Now movies and TV shows get made year-round. They need to be awarded year-round. They need to be more efficient. And at the local level, we need to make things more efficient as well. We need to cut the costs of doing things, and we need to find a way to be able to expedite the process so it's just easier to make shows, to make movies, and cost effective enough that people realize, hey, we don't need to go to Hungary or elsewhere. We can just do it here.
Terrific, Kevin KLOWDEN. Thank you very much for that comprehensive update and for sharing the results of your report, which can be seen at miltoninstitute.org. And again, congratulations on a fantastic Milton Institute 2025 Global Conference recently, and appreciate all of the updates here. That is economist Kevin KLOWDEN at the Milken Institute, live with us here on Mottek On Money on 790 KABC.
Searching for an inside look at the people, stories, and passion that fuel the state of soccer in America? The United States Soccer Federation will be launching the all-new U.S. Soccer Podcast. Episodes will go beyond the field with players, coaches, and legends to bring you honest conversations and untold stories. This is where soccer will come to life. The U.S. Soccer Podcast. Follow and listen on your favorite platforms.